So basically, I'm going to be helping a lot of traders become profitable. I'm going to be teaching you guys a system that's actually going to help you become profitable. No matter the kind of strategy you use, it's general and it's going to help you become profitable. You've not been profitable for a while, or you've actually been profitable for a while and you lose track or you just fell out of place. This particular system is actually going to help you become profitable regardless of your trading strategy. It's general. So basically, if you watch to the end, you'll see what you're doing wrong, you could see what you're doing right, and you could see the next step to follow in getting everything done. So let's go. Now, disclaimer, this is my own personal opinion and not a professional advice. You could try it out, and if it works for you, you're good. Understand? To become profitable, there are things you actually need to consider, and I think the most important, firstly, is risk management. And I'm going to define risk management in this particular order. When people talk about risk management, let's say risk management, but like I'm defining it in this particular order: risk per point in life. And what is like risk per point in life? Like literally, what's that? You've never heard of it before. Okay, risk per point in life is actually it actually helps you get to know what kind of platform you use for trading. Will you go directly for a broker or will you go for a prop firm, depending on your capital? If you have let's say you have $1,000 and you need to do some important stuff in your life, basically you can't actually risk that $1,000 for trading. If you risk the $1,000, whoa, you'll be making a very big mistake and it's going to actually destabilize your whole trading. Every loss is going to feel very, very painful and it's going to really, really be bad for you. So I would say risk per point in time or per point in life actually helps you to know if you're going for a trading broker where you can actually deposit your funds and start trading, or you'll be going for a prop firm. Get that very clear. It helps you decide if you'll be going for a trading broker or you'd be going for a prop firm. A prop firm, if you have $1,000 and let's say you want to trade, you can actually get a prop firm account with a less amount of money and use the other amount for whatever you want to use. As the main goal of trading is actually to be in the game. So regardless whether you're trading a prop firm or you're trading a broker account, life account with your money, your capital, it actually doesn't matter as long as you're trading. The main goal is that you're trading, you need to make money from it. So that's it. The next step after risk per point in life is actually risk per trade. The truth is how much risk per trade, how much do you want to risk per trade? Some people risk 0.5% of your account, some people risk 1%, some people risk 2% of the account. So that's very, very important for you to actually know the risk per trade. The next is actually risk tolerance. What is your risk tolerance? After deciding that you want to risk 1% of your account per trade, can you actually enter more than one position? If you have if you have more than one trading opportunity, maybe you have like six trading opportunity for different pairs. I'm talking about people now who trade multiple pairs. You have six different trading opportunities on different pairs. How many trade can you take at once? You understand? Let's say you have today you have three positions. How many trade can you successfully take at a particular time? That is actually what risk tolerance actually holds. So for risk management, we have risk per point in life where you have to decide whether you're going for a broker account or you're going for a profit account. Next is risk per trade, where you actually decide whether you're trading 1% of your account or you decide if you're going to be trading with um, 0.5% of your account or 20% of your account, depending on you. The next is risk tolerance. How many trades can you enter at once? How many trades can you enter at once? Next, we're actually going to be talking about is risk management. I'm giving risk management 30% in your total trading career. Risk management is supposed to take up like 30%. Yeah. So the next thing we're going to be talking about is strategy dependence. You understand? We will talk about win rates, risk reward ratio, and trading time frame. You understand the frequency? So win rate. Let's talk about win rate. Well, some people have a very high win rate. You understand? Why some people have a very low win rate. So these ones are actually strategy dependent. You understand? The win rate could be, let's say, 30% or above. So I'm going to actually post a particular chart for you to actually see how win rate affects your trading career. I'm going to be telling you how your risk reward ratio and your win rates go work hand in hand to decide if you're actually going to be profitable or not. So the next we'll be talking about is trading time frame. You have to this is very important. You have to pick a particular time frame where you could actually be trading. If you want to be trading on the 4 hour time frame, you'll be trading on the 4 hour time frame. Then you could use maybe 1 hour for confirmations and entries, maybe on 15-minute time frame. We could use higher time frame analysis to do your confirmation, but you could trade strictly on the 4 hour time frame. That is if you're a if you're a swing trader. You understand me? For scalpers, they need to go lower, like 15-minute time frame, getting entries on the 5 minutes. So trading time frame actually helps you define the kind of trader you're going to be. Are you going to be a scalper? Are you going to be a day trader? Or are you going to be a swing trader? So the trading time frame actually is going to help you decide that. The trading time frame is going to help you decide that. The next is actually frequency. For scalpers, they have more trades per day. They have more trades at once. So in a day, a scalper could see more than, let's say, 5 opportunities on one particular instrument, one particular pair. So be it gold, be it Euro USD, GBP USD, you could see more than 5 opportunity at once in one day. While a day trader might just see 2, then for a swing trader, they might not even see at all, because probably they've seen an opportunity and they're waiting for it, or they are in an opportunity and they're waiting for it to play out. So the trading time frame helps you know the kind of trader you are, while the kind of trader you are determines the frequency, the number of trades per time at you'll be entering. Understand? This could help you. The trading time frame and the frequency, the number of trades you'll be having at once actually correspond with each other. And I'm going to be giving that. This particular section, I'm going to be giving it let's say 30%. You understand? I'm going to be giving this 30% of your. I'm going to be giving it 30%. So 30% of this and 30% of this: risk management, risk per point in time, and risk per trade, risk tolerance. They're both 30%, which is like 60%. So the remaining 40, I think you would find it in psychology. Now, trading psychology is very, very important. While risk management and risk dependent sections of this lecture actually like holds 60%, trading psychology holds the remaining. You understand? We have trust. You have to trust yourself and your strategy. I think in trust, you have to actually build trust by doing a lot of back testing. Yeah, you have to back test a lot. You understand me? You have to back test a lot for you to actually build trust in your trading strategy. You understand? When you have built the trust you need both in your strategy and in yourself through back testing, you can forward test them using some capital. You could see some people perform very well while trading a demo account, but when risking their personal capital or risking trading on a broker or a prop firm account, they actually do very badly. They perform very, very badly. So I think it's all about trusting their system, trusting their strategy, and also trusting themselves. The next is discipline. Some people, most of the time, a trade could actually retrace back to your entry. So it doesn't mean that the trade is going to close on a break even, or is it going to like still be there and still playing out until you hit your stop loss or your take profit. So what can you actually hold trades for long? Because one thing is that if you do not actually know how to hold trades, you'd actually just your strategy, you might not actually get the full potential of your strategy. The next is you might not get the full potential of your strategy. You understand me? The next thing we need to talk about is consistency. So consistency is actually very, very important. Understanding that you're entering the forex space or the crypto market or any trading market at all for a long term, not a short term. So you're going in for a long term. So you have to be consistent for you to actually see results. If you want to see positive results in your trading career, you have to actually be consistent. You have to show up every day. You have to discipline. You have to trust yourself. You have to enter trades and actually wait for them to play out for you to actually like see the consistency. With consistency, you can then see if you're profitable or not. Some people are not consistent. Let's say they take a loss today and they just go and rest and sleep off, and they get another trading opportunity where they're supposed to actually take a trade, and they miss out on that, and trade hits a TP, and they come back and they regret, and it's actually very, very bad. I think another thing I need to put here is no regrets. I think that's very important. You understand me? No regrets, just lessons. You understand? Just lessons, no regrets. You see, it's very, very important you get that you do not have any regrets while trading, because the more you regret, the more you feel pain. You understand? What you need to do is that instead of you to regret, you prepare for the next trade. Whether you take a loss, whether you lose a trading opportunity, do not regret. Prepare for the next trade. If you were so scared you couldn't enter a particular trade and the trade has already played out, no problem. Prepare for the next trade. Prepare for the next trade. So that is what we're actually like talking about. Prepare for the next trade when you see when you, let's say, you feel like the need to regret a particular thing. Do not regret. The market is filled with opportunities. So why you're taking your time to regret, there could be another opportunity just there. And regret is something that could actually blind you. You understand me? Regret is something that could actually blind you, and you will not be able to actually like see. You can actually not be able to see when there is an opportunity there. You understand? Regret will actually blind you when there's an opportunity there. So while you're spending time regretting and regretting and regretting, an opportunity could pass. Some people like recover from regrets because regret is something that could burn your energy. It could burn your energy. Some people like not be able to like trade for a day or more after taking a loss. Understanding that there are losses in the trading market, there are losses in the trading space. So it's something that you have to accept before getting into trading. Yes, your strategy will determine if you have because you cannot be 100% right. You can be right 30% of the time and still profitable. You can be right 20% of the time and still be profitable. You can be right 50% of the time and still be profitable. Or everything is dependent on your win rates and your risk reward ratio. But then you have to be disciplined, consistent, and you have to trust yourself for this thing to actually play out. So I will be giving this a 40%. You understand? 40% of everything you need to become profitable. So you have this here, risk per point in life, whether you be going for a prop firm account or you be going for a live trading account. Risk per trade, you already know that. How much do you want to risk per trade? Then you have risk tolerance. How many trades at a time can you actually take? You understand me? That's risk management. So then you have all these are strategy dependent. You have win rates, risk reward ratio, your trading time frame, and frequency. How many trades you see at once? You know about this. Choose a trading time frame. Trade on that trading time frame. If you choose 1 hour, what time frame do you use for confirmation? Why trading on a 1 hour time frame? So all these things are questions you need to ask yourself. You see, all these things I just outlined for you, or everything I just outlined here for you, is actually on that. Should I say I'll place everything. I will not place everything in general, but I would say that everything here just needs you to be clear. Once you're clear about what you want, once you're clear about like what you're doing, you can successfully know, okay, you know your risk management. Okay, you know all this. You understand? You know all this. Your win rates, your risk reward ratio, your trading time frame, the frequency, the number of trades that you could take, the number of trades you could take per day. Then you could trust yourself, be disciplined, stay consistent, no regrets. Rather, you choose lessons and prepare for your next trading opportunity. You lose a trade, no regrets. You miss a trading opportunity, no regret. Don't jump in when you're not supposed to like do this thing. You could see some trades are already moving. Some people, because the fact that they actually like missed their entry level, they rush to enter the trade, and before the trade comes back for a retracement, they get taken out. So that's bad. You have to be consistent. You have to be disciplined. Your entry point is supposed to be your entry point. Whether you're using a limit order entry or a confirmation entry, it doesn't matter. You have to stay disciplined. So this is what I'm actually talking about. So we have all this. You understand? 30%, 30%, 30%, 30%, and 40%. That is all you need to become a profitable trader. So if you actually follow that particular trading system, I bet you, I'm kidding you, you're actually going to become profitable. You understand? I want you to work on it and see how it actually helps you in your trading career. Work on it. You're going to see that when you actually just fix all the things I just outlined, you're actually going to become profitable. So shout out to you, steady elevation, and I hope you have a good trading career. I hope you become profitable. So peace out. Steady elevation, guys.